Hey guys, we're here. This is Holy Macro Show on every Friday at 11 a.m. Um, so basically, today, Kashop and I were talking last week about this and the gold market just looking insanely set up, and something that we've been talking about for a while. Like there's this great setup in the gold market. We continue to see this again and again and again. We see the miners, we see, the Kashop's going over the fundamentals. I'm going over the intermarket analysis. We're basically seeing like there's a huge possibility of gold making a great move here. And then it does. Now today we're sitting at all time highs. Kashop, what are you seeing in the gold market now? Like we talked about it last week a little bit. So if you guys didn't see that, definitely check out last week's show. But Kashop, what are you seeing in the gold market? What are you seeing with these trends here? And then we'll jump over to Steve and talk about the technicals behind it.
Sure. So gold, not really much to add. It's in a bull market. It's as simple as that. And in a bull market, your job is just buy and hold until the trend turns. And it's just that simple. As for the miners, of course, there it gets a little complicated because here you're dealing with individual companies and not all of them are the same. So here you have opportunities. So right now within the mining space, you're seeing so the big news is that Goldfields, which is a South African based gold miner, acquired a company called Osisko Mining, which is a Quebec based gold explorer, meaning they have a deposit which is not a mine yet. So they acquired that company for a hefty price tag, something close to USD $1.4 billion, which is amazing. So when this deal happened, everything in the pre-production stage, meaning all the development stage assets, the exploration stage assets, all of them started to shoot up because that was a clear signal to the market that the miners are interested in acquiring the quality juniors. So this has kind of heated up the entire space, and we are seeing. So one of my holdings, Kina Resources, has gone vertical on this news, and there are several other stocks which have gone vertical on this news. And I think it's a sign of money finally coming back to the undercapitalized juniors. So the space has been kind of dead ever since the Fed started hiking rates because these companies they need to constantly raise equity to survive. And because the financing market was so tight, they were diluting shareholders, they were raising equity at lower and lower prices, which put investors off. So the whole sector has seen a lack of capital for a while. Plus, of course, you have your geopolitical risk, like you have the regime change in Mexico, then you have the new mining code in Mali. So you have all these country specific reasons. And then, of course, you have the Canadian government, which is kind of being hostile to Chinese capital. They don't want Chinese companies coming in and buying the Canadian miners. So you have all these dynamics in play. And what this Osasco deal has done is got people to start looking at the space again. And when they started looking at the space again, so all the babies that were thrown out with the bathwater earlier, so all those companies are starting to get bid now. But it's not long before the juniors with a good story, with a good project, they start to get attention and they start to go mainstream. And it's all in the consensus. So if you are an institution and you see another institution getting into the space, then you know it's safe to buy because you're going to be part of the herd. And once as gold keeps making all-time highs and as the allocation comes back, it's just going to heat up. So we are in the really early starting stages of a gold bull market. And if anyone hasn't seen a gold bull market, they really should go back and look at how the gold miners performed all the way from the Great Depression to the 70s to the 2000s decade to the 2009 to 11 commodity bull market. So you should really look at how much leverage these gold miners can offer to the price of gold. So if you go study that, you will understand why, even though some of these miners are already at 52-week highs, you can absolutely see the value and you can absolutely see the growth potential there. So that's where we stand today.
Nice.
Shop, I know that this is like almost considered like common knowledge among analysts that you go to the miners and that's where the juice is. If I just look at a simple ratio of GDX versus GLD, and I look back in history, that's not what it shows. It shows I would have done far worse being in GDX than GLD during the last commodity super cycle. That relative ratio, straight line down. What makes you think it'll be different this time?
No, so that's exactly why you should not stick with the ETFs and start picking individual stocks, because these ETFs are market cap weight. And so there are the companies that are doing the acquiring and then the companies that are getting acquired. The companies that are doing the acquiring are these big mega cap stocks,
Yeah.
which can afford to issue shares, which can do all kinds of things, like they can play with the balance sheet, they can raise debt. So they are going and acquiring these juniors because they need to replace what they mine. And so the value is in the junior space. So if you're buying the GDX, or if you're buying the GDXJ thinking you're getting the juniors, maybe you're getting exposure to a company with a mine in, just to pick a country, Niger, because it's been in the news, or it's in Mali. And that's really not where you want to be. You want to be in something that's safe. You want to be in the good assets, and you cannot just lump 30 gold mines into an ETF and think that they'll have a good performance when gold picks up, because that's just not how the space works. It's not. It's a the management matters, the jurisdiction matters, and sometimes you have good jurisdictions turning into bad jurisdictions. For instance, Mexico. Almost all the silver miners are in Mexico because it's been a great country for mining. And then all of a sudden, they are like, we are going to ban open pit mining and we are going to put that in the constitution. Now you have a change like this, and you have Canadian and US companies going into Mexico for the last 20 years. And then all of a sudden, they find Mexico is not as attractive. And then the other flip side is Argentina. Here you have a free market oriented president who says, we are going to remove capital controls. We are going to make it easy for money to come in and go out. And you have all these mining companies in Argentina. Now suddenly they get revalued. Whereas if you just use a ETF, you're not going to get these nuances, because the ETF providers don't employ analysts. They use a market cap weighted approach. So you're not really getting a good bang for your buck when you buy the ETF. But if you're buying the individual miners and you know what you're doing, then this is absolutely the time to be buying. And this is absolutely the time to really dive into this space, because there's a lot of money to be made.
So this is one of those industry groups where it seems like, and like I feel the same way about biotech. I feel the same way about a lot of commodity stock subsectors. I feel this way, where there is an elevated risk of picking the wrong ones, right? You can't just throw a dart and they're all going to go up, right? Something like banks, home builders, even these things all go up together. It's hard to mess up. But you're talking the asset mix that these guys have, one junior against another one. Basically, their gold assets, where they are, where they're located, what are the regulations there, how good is it, once they dig. All those things vary tremendously from one stock to another in gold miners. So for me, my first reaction would be just go to the ETF. But then, like you're saying, not a great option. Makes a lot of sense because, like I said, when I look at the relative trend of GDX, doesn't look like it's a very good option. So I think this is one of those places that lends itself to building your own basket. What do you guys think about that? So like spread that love out over 5-10 different names, kind of build your own little ETF of leaders or relative strength winners.
Yeah, absolutely. That's the way to go. And I'll give you another reason for it, more than just a jurisdiction. So you have some of these mines are open pit mines, some are underground. The open pit mines would have grades something like 1 gram a ton, and they would use a ton of diesel. So when you have costs going up, when you have inflation, when you have labor costs going up, these mines are going to be impacted. Maybe their costs rise faster than the price of gold. And then you have these underground mines where you have grades like 6 grams a ton, 10 grams a ton. And it's not as labor intensive, it's not as diesel intensive. And those operations will be gushing money when gold keeps going higher, because their costs are not going to rise as fast as the open pit mine. So you have this nuance as well.
So do these guys, similar to like the oil and gas businesses, in their annual reports and their quarterly reports, they're putting out like a break-even cost for gold? Is that right?
Yeah. Right. So they put out 3 different metrics. One is your total cost of sales, and that is total cost of sales per ounce. And the other is your all-in sustaining cost, which is kind of the go-to metric, even though it's very loosely defined. So every company uses the AISC their own way, but that's kind of the way things are measured. And then you have the cash cost. So you have these three different metrics. You want to look at a company which has its all-in sustaining cost somewhere under US dollar 1400 per ounce. So that's a good number to target.
Yep. I like it. Look, this is not like a group of stocks that I'm usually interested in. If anything, like I have an aversion to precious metals. I don't like them, but
It's a graveyard of capital.
That's what?
how it's been it's a graveyard for capital. That's the way it's been for the last 13 years.
Right. Yeah. Like these things to me, they're like a step up from like the airlines. But I added a bunch over the past few weeks.
So how long has the GDX ETF been around, Kashop?
I don't know, like more than a decade.
So if you go back further to the time, because the Huey Gold Mining Index is the only one you can really find that you can get a little bit more time frame in there. But if you look at it too, and number one, everything's very cyclical, right? Like, because if we just go back as far as the GDX will go, yeah, you're just going to see a huge downtrend. But let's talk about when the gold miners actually did outperform, which was a very short period of time. But that's usually kind of how it goes. Gold's going to be the thing that kind of holds your value over time. The gold miners, they're going to go in phases. I've never seen a gold miner that's just the outperformer for decades upon decades. Kashop might be able to tell me one or two that's been like that, but most of the time, most of the big ones aren't going to do that. But if you can kind of find the area and the times to buy, and really, like, we got to think about it in a couple different ways. There's relative value. Relative value would be, if you look at gold, the gold miners right now, it looks pretty insane. You know, if you see this chart all the way down here, if we started to make a move in these gold miners, they start to outperform. There is a very short period. So to me, they're trading vehicles. As something that you can make a lot of money in at times, and other times you want to kind of stay away from them. Somebody like Kashop, that's why I listen to his commentary so much on this subject, is he can find the ones that are the winners in there without much risk behind it. He also knows where the risk is. Because for me, it's very hard to keep up with. Okay, well, let's look at, when I forget the country you always talk about that you're like, you do not want to own anything in that country. But there's one of the countries that you always talk about that you don't want to own anything in that country. There's just so much going on in the gold mining space. So I think it's a super interesting space going forward. I could see it being a major outperformer, but you want to be in the winners any way you look at it.
How are you like picking vehicles to play something like this, Jason?
So for me, it's one, futures is always the purest way to do it. The purest way to do the types of things are to straight get into futures. You want to buy gold, GC on futures, man, you're going to get your alpha, you're going to get your outperformance, you're going to get everything you want out of it. That's going to be the best way to do it. And then next thing, you wait for the rest of the cycles. Silver is starting to pick up. Is that going to be the next one to kind of go? For me right now, it's gold. And then gold miners have started to go. They're now in an uptrend on most of the gold miners that we trade. And then we get to the next part, which is silver, platinum. These other areas should start to pick up as well. We're just not seeing that yet. When this sector gets really, really risk on, and Kashop knows about this as well, like, it's insane. The sector that's part of the reason why Kashop and I have seen this market kind of move up and seen the breakouts and seen it go up. And we've just been sitting here going, like, we're not seeing any mania while people are talking about it like it's mania. And it's like, no. If you've seen if you were around in the late 2000s, early 2010s, you've seen mania in the gold market, and it's fucking insane. You'll run into random people that are on the street telling you that gold's going to $1 million, and like everybody's trying to hide their money from the stock market because they want to buy more gold. Like, this is just, hey, we're breaking out to new highs and nobody's talking about it, which I like. I think that's the best type of markets. You talked to somebody about that the other day. The best type of moves are the ones that you just have no real reason for just yet. And then the mania usually comes at some point later. So I like where gold's at. I think it's a hell of a move right now and a hell of a trade. I think more and more people should be paying attention to those zones, and I think there's a lot more things that are going to start catching up and maybe playing the catch-up trade, even though that's something I don't do, is something that could be interesting going forward.
And when you say catch-up trade, you're talking about the silver gold ratio. I've seen you tweeting about the silver gold ratio. I know it's at a logical level here. Silver not performing the way gold has, but are you almost like you have to like anticipate that it should and will if this is truly a precious metal bull market?
Once again, it's so hard for me because everything's based on trends and models, and
Right.
even though like the primary trend and intermediate trend for silver is still up, we're still looking at this situation of going like, hey, you know, gold is definitely lagging right now. I'm gonna see if I can find that shot that I took the other day of gold, silver gold ratio. But basically, the silver gold ratio, the silver is sitting at the bottom. It's starting to tick up now. It's sitting at a major support zone. And once again, there it is. And so it basically started to gap out of that zone yesterday. And today it's pulling back a little bit, which is normal. But if we look at it here and we see that we're kind of sitting in that value zone for the silver to gold ratio. And we've seen a lot of bounces. This chart goes a lot further back. I'll see if I can find the other one later. But we've seen a lot of bounces out of this zone. It definitely could go up, and meaning silver would be the outperformer for a little while. So I would pay attention to this here and go, okay, the silver should be the outperformer. But also another thing that we could talk about more is then what's next after that. And Kashop, you know, I'm just taking a guess. I'm thinking as well, and this is something you and I both think about too, is probably the juniors next, because a lot of them are silver miners. What do you think about the juniors? Do you think they're going to start catching up soon? They actually look pretty good already.
Absolutely. So that's how it's starting to play out now. Ever since the Osasco mining deal, the juniors have started to get a bid, and it's a matter of time. So what you need to see is institutions getting serious about investing in gold. And then what happens, you start to see some private equity funds getting raised, and like Cascade Capital is pretty active in investing in the juniors. So they do these private placements where they buy shares at a discount to market, they fund the company directly, and they get warrants out of it. So that's a pretty common way of financing the juniors. So when you see more funds start to get into it, that's when you will see some of these juniors with quality assets, they will really get recognized, because you will get these private placements which get oversubscribed. So exactly the kind of craze that you're seeing with these AI names, wherein you have VCs and private equity firms throwing money at any company which says, I'm going to develop an LLM. You're going to see the same kind of mania with the gold juniors. And it's going to get to a crazy stage where you will have one promoter launching 2 3 companies in different jurisdictions. You will have them all promoting it using a common platform. So I have seen these cycles before, so I know how it plays out and what rings the top. So you'll see companies without a resource estimate based on a few drill holes being worth $1 billion or something. And you just know that there's no way that's going to become a mine in the next 10 years. It should not be worth that much. And it will not matter because the stock will just keep going up every day on hype. You'll have, and the classic top signal would be, I think, 2011, you had all these companies advertising on TV about you sell your gold to them, they recycle it, give you money, like you saw those kind of TV ads. So when you see that kind of mania come in, I think that would be close to the top. It's very similar to what we saw with AI, where I think around March it was, the craze was that nothing can go wrong. Like it doesn't matter if Nvidia is 3 trillion, it doesn't matter if so many companies are spending money on Nvidia and those stocks are still going up, even though they are spending money. And it just didn't matter because people are just throwing money at the space and valuations didn't matter. So you will get to that point, and that is the time where you will see advertisements for companies, drilling in Indonesia, drilling in the Philippines, drilling in any kind of exotic jurisdiction, not necessarily a bad jurisdiction, but an exotic jurisdiction. You'll find companies drilling in Kazakhstan and Ethiopia, and they'll be worth hundreds of millions of dollars, even though you don't know how the mining laws will play out in those countries. So when you get to that stage, that's when it's a mania. And right now we are so far away from it that it's still too early. It looks like stocks are making 52-week highs, but it's still way too early.
So I think those are great points. This is just how markets work, right? You see this in every industry throughout cycles. Are we seeing any of it yet? Like, we track Form 4s and insider filings, so I haven't seen any of those kinds of private placements so far this cycle. That's kind of surprising.
Yeah. The copper miners did it when copper started to move up in May. The
Yeah.
copper miners kind of started to get active, but the gold space is not yet.
I like this comment, which is the best mining hype was when miners tried to change to internet companies after the gold bubble crashed. I remember some of that, but I do remember definitely there was a lot of them that happened in the 90s. You know, everybody was just trying to put, even gold companies, which was insane, were trying to put .com at the end of their name to basically boost up their stock price. And it's going to be very similar to the AI hype. Like, you know, everybody's going to say, hey, we're using AI in some way or some way to just keep boosting returns. I mean, that's going to continue to happen. Every single RIA, every single fund, you know, their big thing now is saying, whether they use it or not, they're saying they use AI. I mean, and once again, like, that could be, I type something in a ChatGPT once a day. That could be some insane algorithm. You know, you're trying to build whatever it is. It's just going to be funny for a while. So pay attention to that. I don't doubt we're going to see gold miners saying, "Hey, we're," and Kashav, this may have already happened, where they're saying, "Hey, we're using AI for this or that or the other thing." Have you seen that yet?
Absolutely. That's already started. And it is very similar to 2017. We saw these companies saying they're going to use the blockchain for sourcing and to make sure that conflict free and all that. So it's kind of funny, like these top and bottom signals. So in 2007, I was following this gold newsletter, and their flagship, the article in that edition, which was sometime around September 2007, the article said, not enough assay labs. So that's our problem point, meaning they're able to drill the holes, they're able to get the core out, but the assay labs are backed up. So they were saying you should invest in juniors which have access to the assay labs. Now, if you understand the space, the way it works, you'll understand how insane that is. Like, if that is the problem, it means companies are drilling too much. It's as simple as that. And they're drilling too much because there's too much money in the space. And that's a classic top signal. And 2015, there was this New Zealand iron ore miner. The market was in the dumps. Iron ore was like $25, $30 a ton or something like that. And they said, because we already have a shipping channel from New Zealand to China, we are going to use that to ship New Zealand eggs to China instead of iron ore. And they completely pivoted their model away from mining iron ore to selling eggs. And that was a classic bottoming signal. So when you just follow the space for a while, you kind of get a feel for this. And unlike other markets, it's really about the feel for it, because with a commodity, you never know where the supply is hiding. You never know where the inventories are. You can try to guess. The physical traders try to guess, but it is a guessing game, and it's just years of experience in the market that could tell you where you're close to a top or close to a bottom. Like what we saw with copper in May at $5, everyone thought they are bullish because Stanley Druckenmiller is bullish, electric vehicles and everything. In reality, it was just a short squeeze on Trafigura, and once they cleared the short squeeze, market went straight down. And unless you really understand the dynamics of the physical space, it's very, very hard to play these cycles, which is probably why a lot of people don't even try, or they just take a trend following approach like you do. So then the whatever is the data, it's in the price. So then you get the benefit of that. But with fundamentals, it's really, really hard unless you use your judgment.
I got a question for you on a specific name. I think you might know it. This has been a favorite among newsletter writers for as long as I can remember. Northern Dynasty. NAK, N-A-K. You heard of this?
Yeah.
So they got some property out in Alaska, the way I understand it. Is this a real business?
It's a real business.
It's all these. They got big problems with the government out there, from what I understand, right?
Yeah, they have a big problem with the fishing community. So
Fishing.
it's one of the the fishermen.
And is
So they
this
have
like
a powerful law.
this is like an Anwar, whatever they call it?
No, it's not that. It's not that. It's just that uh, it's going to be a big open pit mine in an area that's known for high quality sports fishing. So everyone's like, if you remember the Exxon Valdez disaster
Yeah.
and how that affects. So the entire that community there is kind of hostile to having a Canadian miner coming in and developing a big open pit there. Even though if Pebble ever becomes a mine, it's going to run for 30 years. It'll transform Alaska the way Grasberg transformed the whole of Indonesia, or Cobre Panama transformed the whole of Panama. So it's going to be that big a deal. And the Alaskan government actually cuts royalty checks to the residents from whatever they make of the mine. So it's going to be completely transformation for the economy, but some of the fishermen just don't want to see that happen. And then of course you have the NGOs and the greenies and all of them, they say no, it shouldn't happen. So it's funny you asked this, because so I recommended this Canadian Junior. They have a deposit not as big as NAC, a smaller deposit in the Yukon. And the Canadian government, or the Yukon provincial government, what they did was they signed a deal with Alaska to build a port there so this company could ship their concentrate out of Alaska. So you have an Alaska project that's not getting off the ground, but you have a Yukon based project with the government actually supporting them and trying to get them off the ground by negotiating with a foreign country. So these nuances, if you lump these stocks into an ETF, you will never get these nuances. And the reason NAC gets promoted so much is because it's a nice story.
Yeah.
It's a really nice story. Just that the hope is it will one day get permitted, when in reality, I mean, uh, something like 800 to 900 million dollars has been sunk into that project with no return so far. So it's just throwing money down a hole trying to play the spikes. And it's very similar to, there was this US LNG developer called Tellurian, which just recently got taken out. For the last 10 years, that's also been a newsletter favorite. Every once in a while, LNG goes hot, Tellurian gets pumped, and then it crashes right back down. So it's NAC is very similar to that.
So do you, like, as a general rule, do you just run from or stay away from these heavily promoted names, or sometimes there's something there? Because
sometimes there's something there.
Yeah. Okay.
So like you had this company called Trilogy Metals. So what happened was they wanted to build an access road to their project, and the US government denied it. But if the Republicans win, then that access road gets built. It gets easier for them to truck in supplies, and that project will get off the ground. So right now, I played the pump in that stock, and if it looks like the chances of a Republican victory are higher, then you can see some of these stocks go 10x. So NAC in 2016 actually did a 10x because the hope was Trump would reign in the EPA.
And didn't he try? He tried, right?
Not really.
He's been talking about it on the campaign trail now. Just recently, I heard him talking about. He was talking about drilling in Alaska with Elon Musk the other night.
Yeah, so that's for oil. So I think with the oil industry, they have a lot more leeway. So he's trying to just get the Arctic National Wildlife Refuge, those UNWRA land declassified so that they can start doing exploration drilling. That's different.
Yep.
Pebble, specifically the NAC, that project, it's specifically the local opposition. It's more than anything, it's the local opposition, and it's the EPA which is dead set against it. And then you had the other issue where some NGO went and talked to the CEO, the former CEO of the company, got him on camera bragging about some bribery and his callous attitude towards the locals. And that guy got fired, and the company again got a lot of bad press because of that. So with mining, it's a very much a local issue. So there was this one company called Tahoe Mines. They had a mine in Guatemala, and there was some local protest, and the security guards who were not natives of that country, they opened fire on the protesters using rubber bullets. Now, that all of a sudden became a big issue, went to Canadian courts. The company's mine got shut down, and that was a silver miner. So you would have bought it for leverage to the silver price, and then all of a sudden, relatively safe mining jurisdiction, something like this happens. And Argentina, same thing. So there's a province in Argentina. I'm sure I'm not spelling this, pronouncing this right. It's Chubut. They said no more open pit mines. Now, Argentina is known to be an extremely mining friendly country, mainly because you don't have a high population density. And then you have a province saying no more open pit minings, all out of the blue. And then all the money that's sunk into exploring for gold there, that's just dead money at that point until something changes. So it's a very nuanced space, which is why you will see all kinds of promotions. You have to be very sure of what you buy. You have to understand your holding period. And you also have to understand how the people who are promoting the story are trading it, how they are compensated. Because
Yeah.
most promoters, they're not getting paid to do the like you're not paying them for the promotion, you're not subscribing to their newsletter, so it's not like they are profiting off you, so they probably have some other deals with the company. So you may have a situation where someone gets a big bunch of
stock.
warrants, or
Yeah, they get
Yeah.
warrants in stock. I know how it works.
yeah
The business.
So another question that, Kishop, we could talk about this a little bit, that keeps coming up is when we're looking at something like the yen and going, hey, the people keep getting in this talk about the yen and how they can buy oil with the yen. I know in Iran, that's the situation. So can you elaborate on that a little bit more? Because I know you'd probably be the guy to go to talk to about some of this stuff. So do you know much about how the yen works as with other currencies and with other commodities and so on, and why they can actually buy things like oil and so on?
So Japan is a big energy importer. They've always been a big energy importer, and it's just some countries are just trying to bypass the dollar in the trade
Yeah.
deals, and this is mostly like countries like India, where you have a controlled currency. They want to bypass the dollar. So when you have a bilateral deal between, say, India and Japan, or UAE and Japan, they can just bypass the dollar, and it's kind of like a swap. But end of the day, it's not really that significant considering how much of global trade happens in dollars. These swaps, they're definitely beneficial for the individual parties involved, but end of the day, it's not going to affect the FX value of your currency, not in a meaningful way.
I'm surprised at Japan though. Like we've known this about the communist oil countries. They've been trying to bypass the dollar forever and continue to fail to come up with any, decent alternative to the dollar. But is Japan kind of supporting them in that endeavor to stay outside of the dollar system?
I don't think so,
No,
because
they're just
no.
using yen.
Yeah.
Wow. That's interesting.
Yeah, so I just wanted to just chat on that because I know that's come up a bunch lately. And people have been asking questions, especially now that everybody's interested in currencies like the yen because of the last situation. So the next one that keeps coming up, and Andy brought this up today, which is how's everybody feeling about China right now? What?
Love it.
Love it. Nice. What about Kashop? What are you thinking?
Same. Love it. Just bought another Chinese stock yesterday.
Yeah.
Dude, look at Alibaba today. Their earnings report, I won't say it was bad, but it wasn't good. I think they missed top line estimates by like 20%. That's never good, right? Mixed report at best. Stock was flat yesterday, up 5.5% here today. When you see a pattern like this, right, this prolonged rounding bottom, it like looks like it has the semblance of a trend reversal maybe one day in the future, right? Like it's working on it, it's kind of getting there, and the company's coming out and giving bad news, but the stock can't fall on the bad news. The stock is actually reacting positively to bad news. This is inflection point stuff. This is trend reversal stuff, right? You see it the same way, the opposite direction at tops. Right. So one day NVIDIA is going to come out. I promise you, I don't know if it's this quarter or 4 quarters from now. they are going to absolutely knock the cover off the ball. They're going to blow out their earnings estimates, and the stock is going to be down. And that's some of the best evidence we're going to have that maybe the highs were in for NVIDIA or the price is starting to peak and roll over. Alibaba right now is the opposite of that situation, where it seems like whatever bad news get thrown at the stock, it's like, all right, we're already down enough kind of thing. So that's the kind of sentiment I like to see with a bottom.
Yeah, and I think Alibaba is doing quite a big chunk of buybacks. So
Hell
they are
yeah.
doing
They
exactly what the
increased-
American companies do.
They didn't increase the authorization, but they have like 30 something billion left on it, I think, right? And they just keep buying.
Yeah.
That's great.
Yeah. And with Chinese stocks, I think it's time to look at the FXI rather than just the internet and the tech stocks, because FXI gives you broad-based exposure, and right now everyone's kind of written China off. Like, sure, people are buying the internet companies, but if you look at FXI, that is the large cap, the broader based Chinese stocks, I think they are due for a rally.
Yeah, they got energy and financials in there, telecoms and stuff. So it's definitely built different from the Crane shares, or what's the other one? The CQQQQ.
Yeah, CQQQ and KWeb.
KWeb, yeah. I think China is incredibly interesting. I think there's so many dynamics that are kind of coming with that. One being, how's it going to affect commodities? And that's, to me, like number one on my list always, obviously. The first thing I think is, how will this affect commodities when I see China start to do well, when I see reasons for China to do well? Because right now, that's the biggest thing to me, is there's a lot of reasons for China to do well here. So as long as there's a lot of reasons for China to do well here, I don't think that there's any reason for us to be bearish on it. I don't think there's any reason for us to also be bearish on commodities, even though there are certain areas you want to avoid right now in the commodity space. I think in general, we're going to start to see things pick up, especially the way the COT reports look. I mean, Jesus, if you look at the COT reports, that's part of the reason why I started putting out all these bottoming signals recently on our channel, just because we have such Palladium, it's insane commercial buying, insane producer buying. The rate of change for producers continues to move higher all the time. If we look at heating oil, the same thing. We look at gasoline, the same thing. Basically, across the board, you're seeing these extremes in commercial buying. Yes, normally oil stays net short commercials. Similar with gold as well, but when you get to major levels is all you're really looking for in the COT report. So we're seeing these major levels get broken in commercial interest. We're also seeing a lot of shorts come into the picture from the hedge funds and retail. So as long as all that's kind of happening, I could see this kind of picking up in a nice direction. I think the next thing we would want to see to get really bullish on China is copper to start to really move. Copper is starting to move. It looks like it's bottoming out a bit, but I would love to see it start to really move. Some of the miners actually look better than copper right now. So I would continue to watch that space for that. And another one, we talked about a while ago, LNG. We're looking at natural gas too. Looking at natural gas, looking at anything in the natural gas sector. Like, there's a lot of things to be bullish about here, on the fundamental side especially. And now for me, I'm just waiting for the price to kind of catch up for most of these things. But China looks really good. I'm very bullish on China. We are long the FXI. It's been a ride, but we're still long the FXI.
I look at some of these nat gas stocks like Kinder Morgan, Cheniere, and do these guys not trade based on the price of nat gas at all? Because natural gas is terrible, trading at the lower bounds range, and Cheniere is breaking out to new all-time highs, basically.
Yeah,
yes.
So Cheniere is they're more like a toll milling arrangement, wherein the natural gas producers, they give them the gas, they convert it into LNG, and they load it onto the ships. And a lot of these are also take or pay kind of deals. So no matter what happens, you still have to pay them for booking their capacity.
They're trading on volume more than actual price.
Yeah. So they do get some exposure to the upside. So they will have a hedge book. So everything depends on how their hedge book performs. But actually, in my opinion, some of them are kind of overvalued for right now, but not overvalued when considered over the long term. So like I recently had this conversation with a fund where I just told them, if you have a 10-year horizon, just set up a separate vehicle, buy the buy the natural gas producers, buy the LNG place, buy the utilities, and just let it be. You will get a like at least your hurdle rate of 15% IRR out of the whole basket. There's no, so the value always fluctuates between one part of the natural gas sector to the other. So it's either when natural gas prices are going up, the producers who are unhedged, they make a load of money. Natural gas prices are going down, the producers which have a massive hedge book like your EQT and your big players, so they make the money. And when it's natural gas is flowing to your domestic industries, then you have these pipeline companies, they make the money because there's just more volume there. So whichever part of the cycle you play, if you have a 10-year horizon, you just buy the whole basket, you will for sure make money in the space. It is just extremely hard to time it and figure out where the value is in this chain.
Yeah. Yeah, unfortunately, the way some of these charts look, me and Jason can't buy the basket.
Mhm.
Like Devon Energy, right? Apache.
Yeah.
Like you can. Here's the thing. I know nothing about the stuff that you're talking about, Kashop, but I can look at charts and know between these energy names, these oil and gas companies, if a company is more exposed to natural gas or not, because they look different from the other ones.
Yeah, the stocks will be more volatile.
Yeah,
for sure. Yeah,
it's a nice chart. It's a really nice chart.
It's beautiful. It's beautiful. Honestly, that's a new 52-week high, continuing to break out of a long-term consolidation pattern. I mean, but a lot of the energy space looks really similar. Yes, we had that pullback after a nice move, but like a lot of the energy space looks very similar. This long-term uptrend that's been intact since going back to 2020, then moving sideways in mid 22 till now. You know, I would still think that this is a possibility of moving a lot higher, this being another leg up in energy. But it might take a little bit. It might take a lot of work. It might take a little higher oil prices. Right now, oil prices are having some pressure on them. So as long as that's kind of happening, we're kind of going to see this sideways move. But at some point, this is going to change, and it's going to change drastically.
Yeah. So, guys, I have more than met my quota for commodity conversations this week. I'm gonna hop. I gotta hop. But this is fun. It's always fun.
All right, Steve. Thanks. Yeah, I got to leave in 10, but thanks for coming on, man. Much appreciated, and we'll talk soon.
Have a great weekend, everybody. Thank you all for joining us.
All right,
Bye,
guys. Make sure to follow
Steve.
Steve, and he's also on All Star Chart, so make sure to follow Steve. So next was the one you wanted me to pull up.
Yeah. So that is just a cautionary tale when it comes to buying these stocks. You really need to understand the fundamentals, otherwise you'll have these kind of stock pulls.
So what sector is this in?
It's the same as Cheniere LNG. So they are developing a LNG export terminal in the US, and everything looks good until there's a problem. So these stocks, the natural gas, the commodity has a terrible name, the widow maker, but the stocks are also kind of there. They are extremely volatile. Yeah, they're extremely volatile, and you really have to know what you're doing. So there is an ETF called LNGG, but it doesn't offer you great exposure, and I don't think it even has much of a trading history. So again, with this space, you really have to pick your stocks, and that's kind of what I love about the current market, that it has become a stock pickers market. Like Cheniere LNG is now a momentum play because it's in a smooth uptrend, it's doing well, but you wouldn't really put it in an ETF or look at it that way. Like, I mean, no one has until now. So maybe that changes when money comes back into the space. So if you look at, I mean, the weekly chart, yeah, probably looks, the move doesn't look as bad, but that's something like a 50% correction in a matter of a week or so, or a couple of weeks.
Yeah, that's almost $9 all the way to $4.50. I mean, that's a huge move.
Yeah.
I mean, once again, it's the thing, like trend systems and so on work great, but I really think in the very small, when you're in a market that's small and the moves can be very big, once again, yes, you can build trend systems, you can use it, but are you going to understand the volatility in these products to do it well? And that's the thing that you have to answer for yourself. It's nothing someone else can answer for you. I mean, still, if you look at it from a very long-term trend perspective, you could make an argument that it's still this is a primary trend signal. This is not a signal I would even advise anybody to trade with. The normal signal would have been out by probably about $6, $7, somewhere between that. But still, this looks pretty bad. Not something you want to touch. But still, if you're continuing to really wait for these breakouts and you go back to something in the look of LNG or something like that, like you can buy these breakouts. These make sense, but also that's one of the bigger companies in that sector. Next is a very small company. There's also there's not a lot of data for that chart either. It only goes back, a couple of years. So or maybe 5 years. So if you're looking at things and you really want to trade them technically, like I always suggest, especially if you're short term, if you're very short term, you're buying swings and so on, you have to really understand that you probably don't want to be in these names that have low liquidity. You don't want to be in these names that are complete speculation plays, and you don't want to be in these names that you're going to need to hold it for 5 to 10 years to make money. And you also don't want to change from where you're a short-term swing trader and then you become a value trader. It's funny that those memes started coming out, the Warren Buffett memes, just constant with pain and holding, and everybody became a value investor, and people were like, well, and Nvidia in 20 years is going to look like this. And it's like, you have to figure out what style of trader you are. Like, I'm not saying there's anything wrong with Warren Buffett's style, but that's his style. I'm not saying there's anything wrong with my style, but that's my style. I wouldn't suggest it for everybody. I think you have to understand the good and bad about your strategy always. There's going to be situations for me that I'm going to catch major moves. But at the same time, there's going to be times where I'm going to give back a lot of those major moves because I'm a trend follower. And then there's also times where you're going to be a turning point trader. You're going to try to catch bottoms. It's really hard to do that. That's one thing about it. But also when you catch it, you're going to always sell too early. So you're not going to catch the meat of the move, but also you're not going to deal with those give backs and profits. So, I mean, it's constant. You just got to really kind of dig into what type of trader you are and then just kind of go from there. But got a few minutes, Kashop. Is there anything else you wanted to cover? I have to go kind of early today because of our son's in town today. So.
Oh, that's nice.
Yeah.
No, I just want to say, so I launched my own newsletter, and I haven't really talked about it all that much, but if you are interested in the kind of content I'm putting out, so I cover individual stocks, and that's my specialty. So I look at the macro, but then instead of picking sectors, instead of picking ETFs, I just go and pick individual stocks based on the fundamentals and with a little bit of the technicals, because if you don't use a chart, then you're not really going to make money. Like, no matter what the fundamentals say, that's the truth. Like, if you don't use technicals, you're not going to make money. So that's my approach. And I have a newsletter which combines both of this. So I'm just going to go ahead and share the link. And if you're interested, just check it out. And I would be glad to have people who are listening here on as subscribers. So
Nice.
it's kashifsriram.com/subscribe.
And it is there's a lot of, and if you are interested in the gold mining space, and you're looking at these gold miners and you want some input on where you want to put your money and how to do it in a low risk way, you're going to want to talk to Kashop. So definitely follow him on his channel on Twitter and YouTube, and then definitely give him a follow on his newsletter. A lot of good content on there as well, so make sure to subscribe, stay up to date with free content, stay up to date with paid content. So, all right, guys. Well, thank you guys for joining us. This was a lot of fun, and we'll talk soon.
Thanks, everyone. Goodbye, Jason.